Welcome back, traders. This is Sandra with Trading Made Simple. Hope you guys are having a great week. Definitely, right? This is Darvis. If you don't know about it, it's basically a consolidation band that we actually broke out. We had been in this band, and you could see that it was highlighted for quite some time here. And so now we've broken out, and we had basically a couple good days of positive consolidation. And now we're breaking down just a little bit. 15 points on SPX, not that big of a deal. However, certainly not having that like strong morning breakout continuation. So as we take a look at that, let's take a look. You can see in the morning, we've had a couple gaps. We've been gapping, and yet today, not so much. And so as we take a look at this, you can see that we had came up. It's amazing how some of these indicators are spot on. This is my trend pivot line. You can see that it was already there prior to this move this morning. You can see the Darvis man. It was already there prior to this move. And where does the move actually come and hit? Right there. So very nice to see where that level is. We're really looking at SPX breaking above 64.81 for some continuation, and that would be just for today because this is a 5-minute. If we wanted to take a look at an hourly, you could see that we are above our last week, what do I want to say? It's the last pivot high, right? On an hourly, this little area right here at 64.26 was the last pivot high. An hourly chart, way better confirmation of what's happening in the market versus a 5 or 15-minute. But it's certainly the smaller time frames give you a snapshot for kind of like what's happening next, where this is saying, hey, what's happening within the hour? And so as we stay above the last pivot high at 64.26, that is bullish. And so as we stay above that level, we are still in a bullish range. And you can tell for the last couple days on an hourly that the Darvis had come up several times, indicating, hey, look, we're in consolidation. And what happens after we're in consolidation? Well, we either accumulate or we distribute. So we're either going higher or we're going lower. And so here is this level today on an hourly. If we look at a 15, which is a nice daily, you could see that we're holding that Darvis. By the way, if you're interested in this indicator, feel free, email me, Sandra@tradingmadesimple.org. I'll get it over to you. So here you can see 64.51. And let's see, the high end is right above. And that's because this morning we had a wick that actually broke above it, but no continuation yet. But this is a sign that we may end up breaking above it if we don't break, right, our last pivot low on a 15. If we break our last pivot low, we're going lower. If we break our last pivot high, we're going higher, right? So this is all the probabilities. And by the way, I wish when I was in college, my statistics and probabilities class was rolling dice and playing blackjack. That would have been a great class. So, but instead, my statistics class was very, very dry. But the one simple fact is that as these levels break, your probabilities, right, are just basically confirming that, hey, you have a higher probability of reaching a higher high when a level is break. But it needs to hold it, right, guys? It needs to hold it. So that's the important lesson for basically consolidation. I think 13 points on a SPX this morning. We're already a couple hours into the trading day. I think that's relatively flat. In fact, looking at a butterfly that I have on today, just looking because of the consolidation that I see on the charts on many time frames, is this morning a good time to do a butterfly or a condor? I like the long condor because you have more room, right? So a butterfly is more narrow and you have to hit exactly on that line for max payout. Here, you got to just stay within the short strikes. So if you stay within the short strikes, you're basically getting, right, your max payout. And so that ends up being a little wider. Definitely more expensive up front. But you can see If you like a higher probability butterfly or type of fly, right? It's just called a long condor. And what it does is it's all calls or all puts. And regardless of what side you put this on, it's not going to matter, just like a regular butterfly. The profits are typically about the same, and so are your buffers and your wings. However, sometimes based on a volatility skew, you can actually get better pricing if you check them both out. So once you line up your trade, and you're looking at what the cost of that trade is, go ahead and switch any type of butterfly you got on, even a condor, go ahead and switch it to all puts. So this is all calls. If I switched it to all puts, which I did this morning, it didn't benefit me in cost. They were about the same, but sometimes you'll see a volatility skew and it can seriously reduce the cost that you get into it. And when you reduce the cost that you get into it, you also oftentimes reduce the reward. So you want to just check that out. So this is the butterfly I got on today, looking for consolidation. It's up a little bit, still needs, this is a 0 DTE. It needs to get some time on its side. And then as we take a look at SPX, let's take a look at the entire market and kind of get like, what is the market doing? And why is SPX just kind of staying in a small range right now? Well, when you look at the market, you can see that we have a couple big hitters here that are green. They're bullish. And then we have a lot of smaller players in the mix that are red. So financials not doing that great. Communications looking awesome, right? Consumer discretionary not that good unless you're in Amazon. And even Amazon is, because it's getting darker and changing colors, it's kind of leaning towards getting bearish here. UNH, big news in UNH. So that looked like it was a buy. A lot of big players getting into that. And you can see that that is definitely bright green. Healthcare overall, though, looking good. And by the way, when we say healthcare is looking good, what does that actually mean? Well, healthcare is typically a defensive play. So as you see some of the name brands, right, the Mega 7 and all of that, not really flowing together as one unit, utilities, healthcare, tends to be a kind of as well as consumer staples, right? Kind of tends to be kind of a protection mode. These sectors typically rise when our tech sectors are going down. So financials looking weak here. Let's see. Apple looks like a big down day. Cisco hot and cold. Hot in the sense that it is getting to be a bright red color, which would say it's on fire to continue to go down. So that's as a snapshot. I just love looking at this in the morning when I may have missed the open or I was on an appointment, and I just want to say what's going on. And once you see what's going on, then you can kind of get your bearings and start going through your watch list. So let's take a look at flow, because footprints. So when we talk about footprints on a chart, right, we're really looking at these bars and trying to identify what price action is doing. Now, typically speaking, we have momentum low. Let's just break it down really quick on a 15-minute. Momentum's low. It's below the zero line. If you don't have a momentum indicator, and they're typically oscillators on your chart looking like this is an oscillator, you should, because momentum drives price. So if momentum is driving price and you're typically a person that always favors the bullish side of things, you could look at the momentum indicator if you were charting out a day trade and say, that's actually looking very bearish on SPX as an example. Should I really get into a bullish play right now? And the answer is no. Wouldn't you rather wait until it breaks that zero line to give you a higher probability that momentum is entering this ticker? And who is entering this ticker? All of these bars on the chart are really all institutional money going in. And so as we take a look at momentum breaking at the zero line, look at the nice engulfing candle right there. Also breaking above the 20 EMA, which I love as a kind of an easy trend finder. And then we have the confirmation candle, right? And then we're toying with this word vertical trend line. By the way, this was yesterday. And so as we take a look at today, we toyed with that vertical trend line as well as our last pivot high. And so as we toy with that resistance level right there, we got two resistance levels right there. And then all of a sudden you can see that we drop back down. And what do we do? Look at where momentum is right here. It's telling you, it's confirming, hey, people are leaving. They're leaving this index. And so as we take a look at that, you can see, even though we've had a couple green candles on a 15-minute, this really is heading where? Right towards our support area, which is our last pivot low on a 15-minute chart. So this pivot trend line not only gives you the verticals, but it also gives you the horizontal pivots. Pivots, I think, are really important because it really identifies what your resistance level is for that time period. And it changes for each time period. So if you're trading a 15-minute or you're looking at a day chart or you're looking at a 5-minute for a day trade, it can really help you with support and resistance. And it gives you your range, right? So this is our range for the day as far as our pivots. So if we were to drop down as an example on a 5-minute chart, let's see if we can see anything from here. You can see on a 5-minute, we're already hitting our support line here. We broke through the vertical trend line. And now, which is bearish, we broke through the 20 EMA, giving you confirmation, right? We broke through a 5-minute consolidation band. That's 3 pieces of evidence right there. In the trading world, we call it confluence. And now we're breaking through our 5-minute pivot low. So now we're actually breaking through that. Now, if we get a confirmation candle on the 5-minute, and look at where our momentum is, guys. Talk about footprints, right? I really love a momentum oscillator. It really resonates with me. Since trading is so subjective, you really want to identify something that's resonating with you because what's resonating with me may not be what's resonating with you. People look at artwork and, one person thinks it's crazy and the other person is in love with it. It's a masterpiece. And so when you look at the chart, you're really trying to make a decision based on that information. And how do you do that? It shouldn't be a gut feeling. If it's a gut feeling, go to Vegas. You're gambling. And by the way, you're going to have way more fun in Vegas because when you lose money here, that you didn't get a cocktail, you didn't get a free show, you didn't get a free room, you got nothing. You got violated is what you did in seconds. I always like that joke. So yeah, if you're doing this based on a gut, you're gambling, go to Vegas. Hey traders, a quick heads up. If you like what you're seeing here, wait till you see tomorrow's video. It's packed with automation insights and real examples. Hit subscribe now so you don't miss it. And as always, the link to our tools and team is in the description below. We're really looking for confirmation of our thesis, right? We're looking at this, we're saying, hey, if we break below this vertical trend line as well as this consolidation band, there's a higher probability that we keep going down. What's the next move? So we come up to the consolidation band on a 5-minute and we see that we hit it, but we didn't break through it to change that trend, right? So we're coming back to test the lower limit of that consolidation band. What happens? We broke it. There's evidence number 2, right? Okay, we're just patting on the confidence that you should be getting based on your analysis. Now, we broke below the 20. I love the 20 EMA. That's more evidence right there. And then we broke the previous low. Now we're testing it right now. If we pop back in here, then it was a fake out. And then where's our next resistance level? Right at that vertical trend line, which is awfully close to that other consolidation band. But if we end up breaking above this consolidation band, breaking above the 20, then we can start to see, right, the environment change. Now, these changes are happening relatively quickly because we're on a 5-minute chart. It's somewhat noisy. If you're trading on a 1-minute chart, oh, believe me, you talk about noise. It's impossible to trade with consistent profits on a 1-minute chart. It's very, very difficult, I believe, in my opinion. So as we take a look at this, we're coming right back into our range. And what does that mean when we come back into our range? Well, when we come back into our range, remember, if we're range trading, we're in a range. We don't have really anything that's causing a lot of volume in the market. Then you buy a call at support and you buy a put at resistance. And as we take a look at our range today, right? This was a fake out. We always want a confirmation candle. It's the easiest way to identify fake outs. I mean, it's easy and high probability. And what I mean is like if you're trading on a 5-minute candle in this example, we had a 5-minute candle break the pivot low, and then the next candle is still laying on top of it, right? So, in order to remove yourself from a trade from that consolidation, if you're a long call buyer and a long put buyer, then you really want a one single candle on that same time frame to just break it. If it breaks it, and let's say the next candle starts as an example, and we start right over here at the 20, right? That means that we broke above that pivot low and we're clear of it. We're not keep touching it. When it keeps touching or laying on top of it, each and every candle on the chart that you're looking at, then you're just in a fake out consolidation zone. And so that break, even with all the confluence, all the evidence that you kind of analyze the chart with, it it it's not complete, not until you get that confirmation candle that, oh, this is a fake out. Or this is a confirmation of a breakdown. All we need is one confirming candle below here, right? Not touching that line, not touching any of those things that we're looking at. Because as soon as it touches, all you need is a confirmation candle away from that indicator, that level, whatever you're using. And then that confirmation candle away from that support or resistance zone or vertical trend line gives you a clear picture, a clearer picture, not 100%, nothing is in trading, but it certainly reduces your fake out. And of course, sitting in a position where it's just going to consolidate and burn the premium off your long call, long put. I hope that made sense to you. And so as we look at momentum now taking a push up on a 5-minute, now we're looking at, okay, what's going to happen next? So look at this 5-minute candle, right? Nice engulfing 5-minute candle. We call this a matching low, typically seen in fake outs, basically, right? You got the breakdown candle, and then the next candle starts in the opposite direction at its same low as the previous candle. And that's typically means fake out. Do you have to learn all this stuff? I don't think so. We actually teach people, by the way, at tradingmadesimple.org, we teach people that have never traded options before how to trade with automation. So that's our niche, is trading options as well as stock contracts with automation using your own platform. No third party software you got to manage on your computer system or download it inside where it has access to your operating system and personal information. So what this does is basically you're just learning how to do OCO orders on your own platform as well as IPKR. We have coaches that do this every single day. We live trade every day. And we have a great community where there's always live events and training and trading, right? So this is really helpful information, of course, if you don't already have this knowledge. And then as you can see, we have now the confirmation candle away from our support level that was toying with it. And now we're like, okay, we're back in our range. So we're back in our range and we just broke above the 20. That's a plus. Both those things are a plus, being back into our range and breaking above the 20. Where's the next level? Well, that first level here that we broke that vertical trend line as well as the consolidation band, and we're coming right up to it now. We just broke above it. Is it, does that mean that's it? It's a really good probability trade? Not yet, actually. Not yet. And the reason is we need to get these fine lines that we identify as, oh, that's negative. Oh, that's negative. Well, now you need to reverse it. So now we're back into our range, which is a plus. We're back above the 20, which is bullish. Now we are basically hitting our two resistance levels, our consolidation band here. We bypassed it, but we still are laying on top of it as far as this entire candle view. So we're laying on top of it. Now we're breaking above that vertical. If we can break above that vertical, the next candle, nice and clean above those levels, that's it. Our trend is changing. And what else do we have with us? Well, we also have momentum. We have momentum coming back into the market. Look where momentum was last in the market from the open. And wow, 10 minutes, guys. We had 10 minutes this morning. That momentum was above the zero line. And where have we been since? Down, down, down. Slow but surely, right? It's slow, but it's going. And then now we're finally breaking above it. We had a little fake out here, which was testing resistance, had a fake out here, laying on top of a vertical trend line. And now we have confirmation on the momentum oscillator that we're getting positive. We'll see how high this goes, right? Typically speaking, when you're within that 100 range that's in between these two red bands here, then that typically is a choppy environment. And you usually get a nice big surge right when you're breaking that 100 line. You get a nice big surge, and typically you can see the trend start to change. What do I mean by that? Well, let's take a look at back here. If we take a look, we were bearish here, and this is just a 5 minute. You could do the same analysis on any time frame, guys. It doesn't matter. And so, because time is fractional in trading. And so as we look at this and we break above that zero line, that's this candle right here. Am I surprised that it's breaking through the 20 right here? I'm not, because I watch these charts. These are my favorite indicators, right? So not only did we break above the zero line here, we're coming up to the 100, and you can see where we consolidated right here, right? Right underneath that 100 line. That's still choppy right there. But and look at how it's just consolidating. But as soon as we broke above that 100 line, look at the surge of the move, right? Then we're getting some actual movement. Then the next step was this resistance level at the last pivot high. This was all yesterday's, but just giving you an example to try to show you what's happening here, trying to look for another area. Just look to the left, look at the indicator, and you can see what it did in the past. So those are a couple of things. I wanted to talk to you about option flow today, but we're getting close on time. Let's see how that butterfly is doing. Not bad. Total profit on this butterfly is $630. So looking to get about 80% of that. And I'll be watching it, because if I'm at 70% and it starts to break lower, I'm not going to hang on for dear life with any type of volatility or a tweet that I didn't know about that I'm going to lose all my profits just for that 10%. So I'm pretty realistic about taking my profits. But as long as it stays within, right, my short strikes, then it's a pretty comfortable trade as time is passing, because time still helps this, right? Positioning and time. And so as you can see the pink, if you go to your analyze graph, you can take a look at any one of your active trades. You can actually visually see what is happening. And that's important, right? It gives you confidence to make a decision. You need confidence to make a decision. So in order to do that, you can go ahead and take a look at this, and then you can create a game plan. So as an example, I'm an automator. I teach automation. I think automation is a benefit in any strategy that you trade, whether it's trend trading, and using support and resistance levels is what we do. In fact, we just hit our 1 year log anniversary, and our trades for the year from 7/1 till present right now, I think is up like 130%. And this is automate. We automate on Sunday night. We let those trades play out during the week. We check it on Friday, close any trades before, or set up an automation to do that for us, right? And then we log our trades. And so this is what we do each and every Sunday night, using a curated watch list that our professionals provide. And it's been working out great. And I think it's just a testament that you can just like put effort, 1 hour of effort. That's like when you're new. But when you're experienced putting on your trades, and you're not watching the coach do it live, or you're not watching the video that we create to do that, when you start getting the hang of this, and it doesn't take very long, then all of a sudden it takes 15 minutes on a Sunday. You got the watch list, you program your trades, and you let them play out. You could participate in the market and still go live your life, whether that's a job, family, vacation, etc. And so I really feel like automation, like why isn't the retail trader on automation when all the big institutions are working automation? They don't have a boiler, like a boiler room with a whole bunch of traders. It's all done with computers and automation. And we should be doing the same. I've been doing it for 7 years. I love it. It's totally transformed not only my life being retired, but also transformed my trading and consistency. So definitely an edge here. What else can you do? You guys ever been A premium seller, and why I say that is a premium seller has a higher risk profile, right? So you're risking so much more money to make pennies, technically. But we have premium sellers that really love iron condors and credit spreads and so forth. And what could you do with that with automation? Well, you can make that finite line. I got a doctor's appointment. I need to go. And you'll see these zero DTE traders never leave the computer screen when they got a trade on. And guess what? You get something that gets breached. You're at the doctor's office. How do I know this? Because it's happened to me. You're at the doctor's office and you're sweating because the internet is all you got all those machines at the doctor's office. And for whatever reason, your internet's not great. Using their internet, it's not great. And one side of your iron condor is being breached and volatility starts coming into the market and you are just sweating bullets trying to close that half of the trade. If you've ever had that happen to you, hit that subscribe and like button. All right, premium sellers. By the way, that's another good thing about condors. If you don't have the risk profile for premium selling, you can do condors and debit spreads instead. So you're buying this strategy. All you can lose is what you paid for the strategy and really can give you peace of mind as you learn your skill set. So, but what you can do with automation when you're going to the doctor's office sweating bullets is you can actually just program and say, hey, look, what's my risk amount? $500. Hey, this wing right here is about $500 or, well, it's fluctuating right now, but it's pretty close. Could I just automate a close of this condor when it gets to 64.39? Could I just close that one side of the condor, right? Could I turn this into a butterfly or a broken wing butterfly if it breaches that wing? Absolutely, right? You can do a whole bunch of stuff, and all you need to do is learn how to do automation. All right, guys, I hope you enjoyed our lessons today. It was fun seeing you guys. I think Paulo is one of our lead coaches at tradingmadesimple.org. He and I switch back and forth on Benzinga. I really would love your comments about Paulo if you watch this show. Please email me, Sandra at tradingmadesimple.org, and we'll see you next Friday.